Lisa, you cover the debt markets for us, and before we go into what's driving these returns, just lay the stage for what an interesting day it is in the bond markets.
It is
wow.
an interesting day. Well, it's back to risk on. So people are going back to peripheral debt in Europe, for example, of Italy and Spain. People are in France. They're basically rallying around the idea that the European Central Bank is now buying covered bonds of certain nations. And what basically the European Central Bank is trying to accelerate stimulus to prevent another recession in the region and ignite inflation a little bit more. I mean, there has been a sort of disinflationary trend in Europe that has been very concerning to people. So
it's interesting because wouldn't you say that this would already be priced into those markets? The expectation that ECP was going to do this was already known?
Well, and it had been priced into the market, and frankly, that was one of the things that has been driving returns for most of this year. Actually, Italian and Greek debt has rallied throughout most of the year. This month has been different. People have actually been moving away from the peripheral debt, leading up to this latest action from the ECB, concerned that the ECB was not willing to act quickly enough and sufficiently enough to prevent some of the slower growth that we were seeing. So today, people are actually reversing some of the movements that we had been seeing earlier this month, where people had kind of moved away from this riskier sovereign debt. So now we're moving back to a more traditional risk-on environment on the backs of the European Central Bank. I mean, this is the classic central bank put, right? This is the put option that has been bolstering debt markets for 5-6 years now?
Yeah, it seems like it. Okay, yeah, exactly. So timing is a catalyst. What are some of the biggest gainers?
Well, so for all of this year, German debt has been a huge gainer. Actually, the peripheral debt previous to this month have been big gainers because of the potential for the ECB action. U.S. Treasuries, especially the longer-dated bonds, have been amazing winners this year. And there is a question of how much longer that can last.
What are the signs that those analysts that you're speaking to tell you in terms of when this rally might see a fizzle?
Well, so here's the big question in the market, right? I mean, we saw a pretty dramatic move in the past couple of weeks in treasuries with yields plunging in treasury yields, right? So the question is, how much of that was capitulation of short positions? And how much was that actually just international investors piling into the one safe haven that's sort of still the understood safe haven, right? U.S. Treasuries. And that's not totally clear. It's not clear whether all the shorts have really been beaten out of the market. If they have, then there is more potential for yields to rise a little bit more just because.
But what are you hearing? What are people telling you, one side over the other?
Analysts are still expecting yields to rise, although their expectations have been ratcheted back substantially, so really not significantly rise through year end.
Okay, we're going to have to leave it there. Lisa Abramowicz, our debt expert. Thank you so much.